Hey guys, this is Aisha Shelton.
And this is Kevin Shelton.
Welcome back to Marriage and Real Estate.
Welcome back. We stopped counting episodes a long time ago, so I don't know where we at.
You gotta stop
It's
saying
just
that though, because you always say that too.
Okay. I thought that was just my commitment to transparency.
Oh, okay.
Anyway, this episode we're talking about wealth building through insurance. Now, let me give a disclaimer
Please
because
do.
Aisha's gonna be like all extra on this. We're not insurance agents, CPAs, attorneys. We don't know nothing. We don't really know nothing about no insurance.
As a matter
Other
of
than
fact,
the stuff that we do, that's
The
it.
reason why this is a topic of conversation is because we saw a clip on Instagram.
Of Candy, we'll have to put the if we could put the video show notes link to the clip. It was Candy Burris on.
On another podcast.
It was on
I
Earn
don't-
Your Leisure.
Was it?
It was on the Earn Your Leisure.
Oh, okay.
One of their
Earn Your Leisure.
subsidiary
Okay.
podcasts.
Okay, cool.
But anyway, she was talking about how she uses whole life insurance to invest her money and kind of solidify her retirement, and she's been doing that since her 20s. So that was pretty cool. So you want to talk about the clip, and then we talk about what we do.
Yes, you talk about the clip because y'all know that I do not remember.
Okay, no. So Candy Burris was talking about when she first got her first checks in entertainment or whatever, music or whatever,
Yes.
and her money people were telling her, well, you need to invest your money in whole life insurance because then, let's say if you want to retire at 40 or 60, did she say 40? No, she said 40.
She said she wanted to retire at 40, and then they had to work the numbers to see what she needed
To
to
see how
do
much
to
money
get
she
there.
needs to put away a
Right.
month or whatever, right? But then that money is tax free and she can live off of it when she retires. And basically what she was talking about is whole life insurance. She didn't explain it like that, but it was whole life cash value investable life insurance. I believe Mark Haywood, correct me if I'm wrong. That's what she was talking about.
Okay.
There we go.
It's
So
correct. I'm just gonna be quiet.
no, why would you be quiet?
Because I don't know the ins and outs of it, so I don't feel comfortable having a conversation about it. Now I'll jump
No,
in when
I
you
just
say
want your
stuff.
opinion on how you felt about the conversation and what those strategies meant to you, right? So one of the things that she was talking about is pulling money out of her retirement to live off of once she gets to a certain point. And I know, we can have the bigger, broader conversation of retirement, but what does that look like for you? What does retirement look like for you? And the vehicles that you use to get there.
I mean, I think it's a constant discovery for us, right? Because obviously this is a tool that has been used by people for a long time, and people like us are just getting the or just hearing it. Earn Your Leisure as the platform itself has opened up. I'm not saying that it hasn't existed.
That's not what I'm saying. We've been doing this for like 3 years.
Kevin, I'm talking about people.
Oh, okay.
I'm talking about people that look like us. I didn't say you and me, you won't know nothing about this. I'm saying people that look like us don't have this information. And
Gotcha.
platforms like Marriage
Earn
and
Your
Real
Leisure
Estate
and
and Earn Your Leisure kind of open up that dialogue.
Gotcha.
And then we can have the conversations with our spouses and then with our friends and family, and then it can become a plan, right?
No, that makes sense.
Yeah, so I mean, while I'm grateful for the information. It's like a spark. It's the start of. We do this. I was introduced. I only speak for myself. I won't speak it for you. I was introduced to this concept when we met with our financial advisor.
Yes.
Okay, so what I'm saying is having the platform, having our platform and platforms like Earn Your Leisure, open up people that look like us to these kinds of opportunities of wealth building.
No, that makes sense. I think when we initially not necessarily stumbled upon this information, but started seeking out this information, it came from a perspective of working W-2 jobs with high incomes, looking for how we can place our capital, protect our capital, invest in real estate, and essentially provide for our children in the event of our death, or provide for ourselves in the event of retirement, in a safe, secure way. And I think once we stumbled upon kind of the yellow brick road of that information, it opened up a whole lot of avenues going every which way, right? Everything from self-banking and more complicated strategies to whole life insurance, term life insurance, key man policies, things like that.
So I'll be honest, when we met with our financial planner and he was going over all of the like benefits and the strategies and ways that you can use it, I was like, as long as Kevin gets it, I'm fine. It was like, whoo.
Now, for those that know me, I've been planning to die for a long time.
This is true.
So I've been.
I hate it.
I mean, look though, you're gonna be real rich.
Yeah, but you're more valuable to me alive.
I also want to be equally as valuable dead.
You are. Thank you.
There we go. So, really it was from, let's be honest, black men died real early. And I think that for me, when I had my oldest daughter at
So
20.
morbid. Jesus.
It's the truth, man. We live in America. So when I had my oldest daughter at 20, the first thing I went out and did was buy a 30-year term life insurance policy for $1 million. And the reason I did that was I saw every man in my family die in his early 60s. So I figured, hey, look, I'm 20 now. Let me build up my wealth and time. So I need at least a 30-year runway. And if something happens to me between now and 50, she'll be taken care of. And as we got together and started growing our wealth together, and incomes changed and salaries changed, and we planned to have more children, and we had one child, it was, okay, now I need to turn this $1 million into multiples of millions of dollars in order to make sure our family is protected. And that was super, super important to me. And even when we started the process of preparing ourselves to leave our corporate jobs, we met again with our financial planner, which let me give context. We meet with advisors, attorneys, CPAs on a regular basis to help us in our journey, right? We don't know anything.
We don't know everything.
We don't know everything.
We know some things. We don't know everything.
We've learned some things, but I like to say we don't know anything because we're always learning something new.
Well, and we are experts in the area that we work, right?
We know real
and
estate,
so we know real estate, and so we leave the accounting, the wealth planning, while we know the fundamentals of it. We put the experts in place that help us to be successful holistically.
And these are people that have proven track records of being extremely good at what they do, growing people's wealth, that have their own investments, that participate in our investments. There's a lot of people who have money that work with money. And somebody else said this, don't take advice from people who have never had money, right? Like if they don't have funds, it's very hard for you to let them manage yours. So you don't like me saying
No, it's true though.
See, you be hating.
It just sounds so like elitist, but it's so true,
That's
right?
not elitist. Let me ask you something. Would you let somebody without a license drive your car?
No, but we let people without wealth plan ours. Do you understand what I'm saying? You have financial advisors, and you have there are people who are saying like, I'm your wealth building strategy, or tax advisors or whatever, that don't do well with their own. That's all.
Yeah, but
I'm
that's
saying.
what I'm telling people to avoid.
I agree.
So then what's your argument?
We're saying the same thing. I'm not arguing with you, honey.
Oh, I'm like, I think you just think it sounds mean to say it.
Yes, that's what I'm saying.
Okay. I mean, so, and we're jumping all over the place.
That's what we do.
Let's do this. Tell the people about your experiences working in a bank. When you were a personal banker, tell them the story of that, and then we'll jump back into how we got to this insurance part of it.
Okay, y'all give me just 1 second. What's the significance of that?
To give context of like people with money and what they do with their money.
Okay.
There we go.
Thank you. All right. So
Light bulb. Can y'all impose a light bulb in my over my head or over her head? Is that a thing? All right, go ahead.
Okay, so when I was 20-something, right out of college.
Some odd something.
When I was right out of college, I got a job at a bank as a personal banker. And it was in a pretty wealthy part of Houston, right? And the people that I met in the bank that came into this bank, I learned all of my financial strategies from. So I didn't get it from my parents. I got it from the customers that came into the bank. So they would sit at my desk and tell me their strategies, right? So I remember an Indian couple coming in, and they came in, I think it was like April 12th or April 14th, and he wrote 2 big checks. One was for his wife, and the other one was for himself for his retirement account. It was right before tax time, and he had to contribute to their retirement accounts for the year. So he waited until the day before to do that. And I asked him about it, and he explained why he did it, and okay, I put that in my piggy bank. There was a young couple who came in that were Caucasian, a young Caucasian couple. They were having a baby. And in lieu of gifts at the baby shower, they asked for money, I think it was. And they came and they opened a $6,000 savings account for the baby, and then they were going to invest it. And so every year they said, in lieu of gifts, they give money towards her college fund. Now, is a savings account a great place for that? No, but it was a start, and just the mindset of that. You know what I mean?
There was another couple that got a gifted first deposit on their house.
Okay, that happens all the time. So even in high school, I remember friends at 18, their grandparents had a gift. So when they graduated from high school, they got a financial gift from their grandparents. Okay, I didn't, and nobody I knew did. And I thought that was interesting, right? That was a young newlywed couple came in to open their bank account, their joint bank account together, and they were depositing their wedding gifts. And one of them was this really large check, and they explained that it was from their uncle from her uncle for a down payment on their first house. So these are the kinds of financial gifts and transactions that are being passed down that I had no clue from other cultures, that I just was blown away, right? So it was the reason why I purchased a house at 24, when I barely made, $30,000, but the market was great at that time for such a purchase. There was funds available from the government to, for people with low incomes to buy homes.
And it started your wealth building
journey. It started my wealth building journey, but all of the little nuggets and deposits that I was able to put into my bank, my knowledge of financial knowledge came from me sitting at that desk, and it wasn't on purpose. I feel like it was divine placement.
So to give kind of context and perspective to the average everyday couple, right, we started our journey to invest in real estate as a means to build wealth for our family, right? Now, we ultimately turned that into a profession and a career, and I was in that industry already, but all these things are to make your family in a better position, to put your family in a better position for the long term, right? Your heirs, things like that. And all of these things are tools in your tool belt of wealth creation, wealth building. And at the end of the day, you want to create a great life for you, your family, freedom for you and your family, and for the generations to come. So these are the lessons that not only you've learned from the people at the bank, but we've learned in even our investing journey on putting all these things together to move our family forward.
So I get really excited and passionate about this, right? So we're the Marriage and Real Estate Podcast, and plenty of books talk about how you should have a mastermind, right? Yep. How you unlock your potential, whether it's your wealth building potential, your productivity potential. It increases when you're a part of a mastermind. Yep. And a marriage is a mastermind, and we can truly say that the two of us together
is a mastermind.
And the things that we've accomplished together is just, it blows my mind.
In no way could do those things to the level that we do them individually.
No. The knowledge that he has, people see us and they see that, we have a development company and we do real estate, and that's what they see. But what they don't see is that, the skill that you bring to the table, and then the skills that I bring to the table as well. All right.
Hold on. You're going to this, Kevin.
You're going to answer it.
Let me call you back.
Wow. Okay.
I'm sorry. I did know who that was.
Why did you answer it, though?
Because I didn't know who it was.
Yeah. I got a few calls myself, but I didn't answer them because we're recording.
I wouldn't have answered it if I would have known my phone was on. It was my father. He wasn't talking about anything. My apologies.
Does this stay in?
I'm keeping that in.
Oh, my God. Bro.
It's funny.
It's not. Okay, so phones will stay.
My apologies.
That's why we have these little watches that keep us connected.
It could have been Jesus calling me.
Okay.
No.
Y'all,
Got that life insurance for a reason.
It's my time.
it is your time.
What if I just turned it to a check, like right here, like
I mean, you already a check, but
you a check too?
not as big as your check.
Oh, my check is big.
Okay, so
I'm just fucking with you. You hate it, but
I
you love it.
do. Come on.
All right. I'm sorry.
Okay, so
Keep
I
going.
don't even know what we were talking about. It happens.
We were talking about building wealth together and the things
building
that
wealth
we do
together and the mastermind and marriage. And so there's always this debate of like, do you need to be married? And marriage is an individualistic choice. It's up to you. However, it is very true when two become one, your potential expands.
Now, let me say this: marriage is also a financial choice, right? It's a legal financial choice. It's very much a relationship, and it's very much like whatever. But marriage, even before it was sanctioned by the government or whatever, families made, and we were on a Clubhouse call about this. Families made the financial choice to put two people together with potential to grow the family, right? That's why you have planned marriages and or what is it?
Jack and Jill?
No, girl.
Just saying.
Arranged marriages.
Arranged
there we
marriages.
Go. Those were financial constructs, right?
I mean, I certainly would love, and mark my words, Jesus, you hear me? You hear me, Jesus? I would love to not arrange my children's marriage, but certainly be a part of
Put
the
them
selection,
in the right circles,
the right families, so that we
But
can
even
merge, so these Sheltons can merge with the insert family here that matches our values and our, you know what I mean?
No,
I just
for sure.
think that'd be so amazing. But that's a whole nother topic for a whole nother podcast.
All of these things are for the proliferation of the family, right? These are decisions that everybody makes to say, I want my family to go forward. And how is my family going to get there? They need the means, right? They need the vehicle. They need the people to go forward. We want our children to do better than we did, so we're giving them a foundation to build from.
Okay, so if I can't plug marriage and real estate enough, let me just plug marriage and real estate. So when we created marriage and real estate, our goal was to create a tribe of people who had the same ambitions and goals as us for, wealth building for their family. And yeah, I'm just getting all excited because these are, if any of this information is speaking to you, then you need to join the tribe. It's a tribe.
You sound like an altar call. Like,
do I? This
are
is
you
altar
ready
call.
to find a home?
Are you ready
Are
to
you in
join the
need-
marriage and real estate? Are you
Are
ready to
you in
build wealth
need
for
of
your
a
family?
place?
Like the infomercials at 1 o'clock in the morning with the holy water.
Yeah,
I'm trying to
touch your forehead.
I'm just saying, I run into people all the time that are like, oh man, I really like y'all's podcast. I really like what y'all are talking about. And we created it so we can find people that are like us.
That's true.
And we can grow. Like, we add people to the
value.
mastermind, right? And the more we know, the more we grow. But
And
when
to
you
be-
know something, you bring it
clear,
to.
we've seen amazing couples become a part of our tribe, even through social media, right?
Yep.
We've seen couples that, started podcast episode 1, and it just gave them that spark to go out. There's one couple that we highlighted on social media. Since the inception of our podcast till now, they bought 5 rental properties.
Yep.
And they send us messages like, hey, we just closed on the 5th. Hey, and I'm like,
Right.
I'm absolutely taken aback, right?
Yeah.
Like, blown away. So,
If you, whatever it is that you want to be and see for yourself, like when people say, oh, I want to do that with my husband, or my husband and I want to do that, like, I'm like, get with people who do that. So,
So with that being said, when we, not only worked on our jobs and increased our income and started to put our resources together, our journey was, okay, even before we started entrepreneurship, is how do we create the vehicles to not only put us in a position of financial freedom, but also put us in a position of financial protection for the little bit of money that we had at the time, and how do we grow it? So the first thing we did was seek out highly skilled professionals that could help us protect, grow our wealth, whatever, right? Those were insurance professionals, wealth people, things like that. And in that journey, we, found professionals that really helped. And that's always growing, right? Like, we, add people to our team as we find people who, cover different strategies, whether it's taxes or stocks or different things like that. Now it's just way more robust than it was even when we started. But this particular instrument that we're talking about, which is insurance based primarily, the conversation with that started with a video. We went to it wasn't a movie premiere, it was a private movie showing of something called The Tax Train or something. What was that?
Oh, okay. It took me a minute to figure out what you were talking about. I was like,
No. So
got it.
It was like the screen got dark and it's like, dun dun dun, the world is coming to an end. Inflation. And
Yeah.
then it was talking about wealthy people basically finding vehicles to stop inflation and taxes over time. And essentially what it was talking about is how if you take 2021, right, by 2030, where would inflation be? Where would taxes be? Well, if we're at historic lows, it only has a place to go, which is up. So how do you protect yourself from those rise in taxes that's inevitable with the money that you currently have, right? So what are the vehicles that you can use to that? And if you look at major cities across America and you look at the skyscrapers in your downtown, what you won't realize is that a lot of those buildings were financed by life insurance companies. So the reason that they financed them is, what's a better investment than a skyscraper that was built to stand the test of time and be around for 100 years? So you go to like New York or Chicago, and you have these buildings built. I mean, the building that we're recording in now was built in 1961. There we go. So 1961, they built this building. Well, it's 2021, this building's still here,
Yeah.
right? So everybody whose money was involved in the financing of this building or whatever, their money was protected for that entire period of time, whether that's 60 odd years or whatever. So that's the type of things that we wanted to be a part of, and the vehicles in which we chose as a part of our portfolio was life insurance. So with that, we met with our advisor and we looked at honestly what we could afford. We said, okay, so we're young, relatively, right? How long do we expect to live in, best case scenario? Well, let's say that's 50 years, 60 years, right? So, but we're building wealth along this way. So while you're building your wealth, you don't have $4,700 a month to put in the bank for whole life insurance policies to get to millions of dollars. So what's your best avenue, right? And I'm not an insurance professional. I'll say it again, but these are just the things that we invested in, right? So if you don't have that money to slap down for whole life, you have smaller amounts. The best thing for you to do is term, because term life insurance, while term life insurance doesn't give you the same investable value as whole life insurance, what it does give you is a death benefit, right? So like I have multiple term life insurance policies to protect us in the event of death. So does Aisha. And what that says is, okay, if I died tomorrow, those term life insurances would pay out, millions of dollars for Aisha and the family, because I didn't have the opportunity to build wealth for the next 30 years, right? And that's what they're really there to do, is not only provide a benefit, but replace the benefit that you would have provided in the time.
But it's also how families accumulate wealth over time, too. And so it's just a tool that we haven't generationally been using, right? And so it has to start somewhere. And for us, it starts with us.
Yep.
And maybe our parents. I haven't talked to my parents about what they have.
Well, see, here's the funny thing. When we got our insurance policy, my mother went out and said, oh, man, y'all did this? Maybe I should do that. So it worked in reverse. But she took out policies on herself because we took out policies on ours. So you can be an inspiration in reverse.
Yeah.
Right?
Yeah.
It's like you start buying real estate. And I'll shout out Robert Kennan, who he has an amazing story. We actually got to have him on the podcast.
Oh, that would be great.
So he has an amazing story. But one of the things that he did was, as he grew in his investment journey, he brought his mother along with him. So his mother's up to her 8th property now. And this is somebody who went from, literally serving time in prison to coming home and changing his entire family's dynamic financially, right? Who built wealth across the board, up and down his generational line, because he changed his mind. And it's an amazing story. We'll definitely have him on the podcast.
Yeah, totally.
We'll have
idea.
to shout him out. But, those are the types of things that you can do by the information you learn. And so we did the term. We also did, and here's a shout out to all the entrepreneurs. If you're a dual income earner, meaning you working your job and you working your hustle, and eventually you want your hustle to retire you from your job, one of the things that you need to do is put all your insurances and everything in place before you leave your job, right? So before you quit that W-2, you leverage that salary to maximize how much life insurance you can get, maximize how much death and disability insurance you can get, what you can get for your children, because the day that W-2 stops, you can no longer just go and say, hey, what's one of these insurance companies?
AIG.
AIG. I don't know if they're the best insurance company anymore.
I didn't say a best. You just asked for an insurance
That's
company.
true. Well, hey, AIG, I want you to write $1 million insurance policy on me. And they'd be like, how much money you make? Oh, okay, you're an entrepreneur. You don't really make no money. Okay, we're not writing no policy on your ass. But you can say, hey, AIG, I make $100,000 a year. And they'll give you a 10x benefit, or they'll give you a 3x benefit, or forget what the numbers are. But they'll say, we'll write this because right now this is the amount of money you earn. We'll rate you on that. So even the life insurance policies we have now were based on our W-2 incomes. So as we've gone entrepreneurial and making money, it's not the same level as W-2, right?
It's and it doesn't start off that way, right?
Yeah.
Like as entrepreneur, if you're an entrepreneur, you understand that it takes a little while for you to get to that stability place.
Rolling with the homies. Rolling with the homies.
Definitely rolling.
Yeah,
Definitely.
I like to call it on the lam, or out here in the streets.
Definitely out here in these streets.
Or like Steve Harvey says, your wings will open, but first you're going to bust your ass on these rocks.
Okay, so we definitely bust our
Bust
tails
our
on
ass,
some rocks.
our whole ass on these rocks.
But we better because of it.
But we put the things in place beforehand to make sure that we were good. So if I get injured, even with my company, I have disability insurance from when I was working.
Yeah.
Same thing with Aisha. We put together term life insurance to protect our children. And then the other piece of that is we purchased whole life investment grade life insurance on me specifically for the future, right? So that's not in the same rate, but it has an increasing benefit. So what that means is you can build it up as you go along, right? So if I'm putting $300 a month in whole life insurance, I can increase that to $1,000 a month, $2,000 a month as I grow or as I make more money, but I locked in that initial benefit there. So that initial benefit might be 200 grand or whatever upon death, but that cash value is like a savings account. And once you get enough money, you can actually invest that money. And I don't want to get super complicated because I can't explain it or articulate it easily.
Super complicated.
But they give you a multiple on it, like the bank, right?
So I like to think that with couples, there's always one person who gets all of that, and then the other person who doesn't. So it's very
she just
clear.
know I'm taking care of if I die.
It's very clear who gets it and who doesn't.
Yeah.
Sounds really amazing.
We'll have
though.
to get one of our financial folks on here.
Yeah.
To talk about it because he can do a much better job. He has a whole razzle-dazzle presentation I don't do. But the bottom line is, if I die, mark my words, we at least straight.
Yeah. So if I can wrap it up.
Yeah.
Okay. So if there's anything that we want you guys to walk away with in this episode is that, look into life insurance and how it's a wealth building strategy, how it's a generational wealth building strategy. And I think our conversation today was just like one of those things that drops little nuggets that you're like, oh, let me Google this and let me Google that. So,
You want to give terms and stuff?
Terms?
Like a glossary of terms, like whole life, investment grade insurance.
I don't. I want
term life insurance.
No.
Death and disability life insurance.
Speak to an insurance expert.
That is true.
And find out how you can utilize that tool in your family to preserve
before we wrap up.
But I just wrapped it up.
That's all right. We're gonna continue.
But it's already wrapped.
We're gonna keep going for a couple more minutes because I got
wrapped.
more to say. I got more delivered.
Come on.
More delivered. Where the money reside?
Come on, where the money?
No. So in the video, one of the things that they talked about, and I just think this is a great idea, a bomb-ass idea. That's why I want to say it.
Okay.
The host was saying that there are some families that do a term life insurance policy and have the beneficiary of that term life insurance policy be a family trust. So we're in the age of GoFundMe, right? Where people die, they don't have insurance, they start a GoFundMe. Well, what if your family was your GoFundMe, right? What if everybody got a term life insurance policy on everybody in the family, and when they died, that money went into a trust, and that trust was then the bank for the family. You could get loans from the trust. There's rules to
You
it.
can start
It's an
businesses,
irrevocable
you can-
trust.
yeah.
Exactly.
You can. That's where you go to get a loan to start your business. It's you loan from the family trust.
And not only that, it pays for the funerals, right? Because how many times have we helped or seen families struggle with funeral expenses? And for us,
yeah, but if you were part of the family trust, you shouldn't have no problems with those.
that's what I'm saying.
not talking about from the family trust perspective. I'm saying we all gonna have insurance, and so we don't need.
That's what I'm saying.
Okay.
That's what I'm saying.
It's kind of like a loop.
Yeah, yeah, yeah.
That's why we should have wrapped this up, because now I'm rambling.
No, you're not rambling.
Okay.
We're talking about things that matter. I mean, for us, it's how do you create a stronger family financially? And I think that all these vehicles help with that, right? So I just wanted to mention that before we got off, because I think that's just a dope idea that I want to implement in our family, where we get an insurance policy on everybody across the board, at least in our immediate family and, parents, so that when everybody dies,
It's
that
like
money
a separate
goes
policy.
into a trust.
It's like a
Exactly.
different policy in the.
I mean, because
the-
think about it. If we got it on your two parents, my two parents, and us, and we're all going to die at some point, once we die, that money funds the trust. Even after you pay for funeral. Because think about it. I want to be cremated. You want to be cremated. My mama want to be cremated. So we're not spending $47,000 on funerals, right?
right.
So if we have $20,000 each in a death policy, well, literally you're talking about $60,000 that's going in a trust that the kids would be the beneficiaries of. So when they graduate college and they want to start their business, they can go to the family trust. And that's just that's 3 people.
Because it's supposed to be exponential. And,
It's forever, right?
Yeah,
So
yeah.
it's an irrevocable trust. So as people die, it just keeps funding. And that's a really cool idea. I want to dive deeper, but I know you're ready to go.
All I'm saying is this is supposed to be a 30-minute podcast.
We can't even go 32 minutes, 33, nothing.
This is supposed to be a 30-minute podcast,
Man,
and anybody who
You
knows
a
me
hard boss.
know
You a
I'm
hard
infamous
boss.
for cutting it off. It's over. So to catch the recap, go back about 3 to 5 minutes.
Ooh, cold. Your words is way too hard. You need to cut it. I'm so whack. I'm like Russell Wilson level whack on this podcast.
Okay, but you Russell Wilson level, you know what I'm saying? So
See, you keep propositioning me, and then you don't want me to proposition you back on the
What?
podcast.
I don't know what kind of proposition
You
you
like
think
you
I'm.
know what I'm saying. I know what you're saying.
I mean, you're a great guy, and I'm lucky to have you. Much like Sierra is lucky to have Russell
Oh, I
Wilson.
thought you were talking about sex.
This has been the Marriage and Real Estate Podcast, and we hope that you come back, even though my husband can be kind of crass sometimes.
I'm sorry to be a husband who likes his wife on the Marriage and Real Estate Podcast. Now, this could be the I Don't Like My Spouse podcast, but that's not what this is.
It's not what it is.
This is the Marriage and Real Estate Podcast, where I'm happy to be married and I love my wife.
This has been the Marriage and Real Estate Podcast. Say something.
We out.